The rise of energy prices in the second half of 2023 could leave short sellers in a tough bind. Although the beginning of 2023 has seen energy prices fall, they may be on the rise again in the second half of 2023. Crescent Energy Co. Higher oil prices could boost company performance. Amethyst. If ethanol revenues rebound, Amethyst could deliver stunning results. Transocean. Shares have already defied the expectations of short sellers, and that could continue with higher energy prices. Let's dive in. Here are the 3 energy stocks due for a massive short squeeze. Welcome to Timely Investment Research. Energy stocks have been undergoing a major transformation in the past year and a half, driven by a tripartite cohort of the challenges in the energy sector. This includes elevated commodities prices, geopolitical tensions, and the climate crisis. The first two go hand in hand. The war in Ukraine has revitalized decades-old geopolitical rivalries while lifting global energy and food prices. The climate crisis has accelerated the need for a transition to low-carbon energy sources, as countries have pledged to achieve net zero emissions by mid-century under the Paris Agreement. These secular trends have created both opportunities and risks for energy companies, depending on their business models, strategies, and capabilities. Some companies have been able to adapt to the changing environment and benefit from the recovery in energy demand and the growth in renewable energy markets. Others have struggled to perform well. That does not mean, however, these companies cannot turn around. If they do happen to beat expectations, these companies could trigger a massive short squeeze in the energy stocks, an event when short sellers begin to make losses on their positions as share prices rise. Number 1. Crescent Energy Co. Crescent Energy Co. is an independent oil and gas company that operates in the Permian Basin, the Eagle Ford Shale, and the Gulf of Mexico. The company has a market capitalization of over $2.2 billion and a dividend yield of 3.52%. However, the company also has a high short interest of 8.6%, which indicates that a number of investors are betting against its future prospects. One of the main reasons for the bearish sentiment is most likely due to the company's high debt load relative to its weak cash flow generation. As of second quarter 2023, Crescent Energy had a total debt of $1.3 billion, and cash equivalents only amounted to $2.2 million. Sure, it is normal for oil and gas companies to maintain capital-intensive businesses and thus use a sizable amount of cash. Still, Crescent Energy's cash held on the balance sheet has never been significant, and in 2022, the oil company held $0 in cash. Still, Crescent Energy's outlook for the rest of 2023 could be surprising. Oil prices have been declining since last year, but in the past quarter they have been on the rise. High demand from China and supply cuts from Saudi Arabia could put upward pressure on global oil prices, potentially benefiting companies like Crescent Energy. If the company beats expectations, short sellers could find themselves in a bind. Number 2. Amethyst. Amethyst is a renewable fuel and biochemicals company that produces ethanol, biodiesel, renewable natural gas, and bioplastics. Despite being in a novel sector, the company also has a high short interest of 10%, implying investors could be skeptical about its growth potential. What has hurt Amethyst recently is its inability to beat earnings expectations. For the past 3 quarters, the company has missed both sales and earnings per share estimates. Another reason for the investor distrust is the company's lack of scale and diversification. The company has only one ethanol plant in California, which has a capacity of 60 million gallons per year, and one biodiesel plant in India, which has a capacity of 50 million gallons per year. The company's renewable natural gas and bioplastics projects are still in development stages and have not generated any significant revenue yet. Furthermore, ethanol sales from the California plant contributed to 89% of revenue in 2022. The company's outlook for the rest of 2023 could be promising. Earlier in the year, Amethyst temporarily closed down its California ethanol plant to thwart high natural gas prices. Thus, for the first half of 2023, revenues were skewed toward Amethyst biodiesel business. As the plant reopens and Amethyst ethanol revenue growth regains steam, the company could be benefiting from both high ethanol and biodiesel sales. Overall, these events could trigger a short squeeze. Number 3. Transocean. Transocean is a leading offshore drilling contractor that provides rigs, equipment, and services for oil and gas exploration and production. One of the main reasons for general caution in the company's shares is its exposure to the cyclical and volatile offshore drilling market, which has been hit hard by the sluggish growth in oil prices in 2023. Even when commodities prices were elevated in 2022, Transocean failed to capture that price momentum. The company only tepidly grew revenues by 0.7% in 2022. Similar to the entries mentioned earlier, another reason why investors should be worried is the company's heavy debt burden and weak liquidity position. The company has a total debt of $7.8 billion, which is more than 3 times its last 12 months' revenue of $2.7 billion. This has resulted in significant interest payments over the past few years. As an example, interest payments were $561 million, or 22% of revenues in 2022. The company's interest expense was $417 million in the first half of 2023, on track to surpass last year's interest payment sum. Despite what short sellers are thinking, Transocean shares have performed well this year. If oil prices continue their rise in the second half of the year, Transocean could stand to benefit and deliver outstanding financial performance, putting short sellers in an even tougher spot. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.